That should have been the Ravens head coach, but waited a little too long, didn't they? Everybody's going to hire a young coach now. We'll go from there. All right. So let's get that out of the way. Let's toss that on there real quick. And let me make sure that Thinkorswim is working for me. All right. Here's what we're going to talk about today. We're going to discuss some of the fun things that are happening in this broader market. There we go. It's already freezing. Runner at 9 o'clock. We'll talk about the fragile setup at the moment as well. Dig into some other things. All right, here we go. So, momentum. Pretty simple. We do this every day. We bring everything down to a number. That is our goal. And this will change, obviously, when the market opens, particularly kind of given the fact that we are assessing a market at the moment that is reacting to a large amount of macroeconomic news. We are a little flat, obviously, on the S&P 500, NASDAQ, currently sitting at 25,100. Gold and silver will be in focus. We're going to dig into that momentarily. But once again, just so that you recognize and understand what we're trying to accomplish here, this figure is a measurement, a statistical measurement of heavy volume and momentum influenced metrics. We take every single stock in the S&P 500. We assign it a score at various thresholds. We define those stocks as breakouts and breakdowns. We deduct the number of stocks breaking out versus breaking down, and it gives us a health number for the S&P 500, the NASDAQ, and the Russell. When this goes red, there is a higher probability, according to our data set, that there could be reversals. Now, Friday, we saw a squeeze. We talked about the possibility of that after hitting that 670 level on the SPY the other day. But the trend remains the same, lower highs, lower lows. And we'll talk about a lot of things going on in the S&P 500, a lot of things happening out of China, out of Japan. But right now, until we see 3-4 days of solid gains, it's very difficult to just push our chips across the table. All right, so this is the key news. Goldman was right. Morgan Stanley was right about 2 weeks ago talking about the flush out. Goldman Sachs warning over the weekend, the setup remains fragile. And that's obviously clear in our data. I mean, there's no doubt about it. It's reflecting very similar elements. We're just bringing it down to an equation, down to one number. And I will remind you that when this figure has gone negative, it has preceded larger sell-offs. It's preceded liquidity events. It's preceded, COVID, Silicon Valley bank crash. Now, not every time it goes negative is there a major event, but it's one of those things where you don't know what's coming. We tend not to find out what is coming until a couple of days, maybe even a week later. In this case, going negative on January 28th, we had the gold and silver implosion 2 days later, and of course that massive momentum move that transpired on Wednesday of last week. So we're trying to recover. We're seeing if we were just shaking out leverage in the system, or who knows. All right. So Goldman's saying, right, hedge funds net sold U.S. equities for the fourth straight week. Pretty significant move, 1.5 standard deviations. Shorts outpacing longs 2.5 to 1, so 5 to 2. Single stocks, 70% of net selling. Big number. Second standard deviation move, notional U.S. single stock shorting the largest on record. Now, obviously, when single stock shorting is significant, obviously there is the possibility that forces squeezes. And we have to be aware of this because, as we have seen in the past, markets will behave in a variety of different ways. But I do kind of have that feeling that I have been sharing over and over again for the better part of, let's go back, 5 years. The thing that we're really focusing on here is the idea, that is just hard to look at. The idea here that we want to look at is going back to 2020. Let's see. Let's go to, I'm going to go to TradingView real quick. Back to 2022. All right. So the key thing here on the S&P 500 with the SPY, everything that's transpiring here, we go back. And what we would look at is what happened in this market. Ooh, hello. We're learning how things work with technology. Good grief. Just punch me in the face. It's too early in the morning for this. There it is, 2022. You're going to see in 2022 a path of lower highs and lower lows. And why does that matter? It matters because in this long-term chart, this is our liquidity cycle. We peaked in late 2021. Why does that matter? We sold off, we squeezed. We sold off, we squeezed. We sold off, we squeezed. And we did that for the entire year. And right now, right, coming out of this period of extraordinary heavy shorting, we can have these moves higher that aren't justified by fundamentals, aren't justified by macro. It's just squeezing. It's just low volume buying. And it creates these hated rallies that can transpire despite all of this bad news. So once again, watching to see if our signal turns green, following the momentum with it. Software obviously remaining heavy in the net selling, and there's a lot of people out there that are still defending the software space, saying, "Well, look, Palantir's up a lot." Palantir's not a software company comparatively; it's an AI company. It's the AI software, however the hell you want to describe it. It's the company that's killing everybody else. There can only be one. Highlander. Gold is above 5,000. Well, probably what, 48 and 49, 50, 18. Hey, how fantastic. And we've said this before, right? We shook out all the shorts. We saw a lot of capital flow out, and we are seeing significant buying still out of Japan, out of China. China has announced, this is nuts, $500 billion U.S. in yuan, 3.2 trillion yuan in stimulus for the Lunar New Year. They have a liquidity problem. 456 billion. So they're going to print. And what do you think's going to happen? It's good for commodity prices. Gold moving higher, silver moving higher. Japan, we had an election, and wow. Supermajority, they're just going to spend. That's all it. They're going to cut food taxes, and they're just going to spend. Rice prices just surged in the last year. So why does this matter? Everybody's supporting their financial systems right now. The U.S. Federal Reserve, $40 billion a month in short-term treasury purchases. Japan, well, full bore fiscal, a lot of fiscal repression. Look for that yield curve to steepen. And now China. This should be bullish for gold and silver. Everybody debasing all at once, all at the same time. Platinum, palladium, everything moving as well. And this is an opportunity to either choose what your adventure is. Are you going to go long silver from 80, look for another move back to 100, or are you going to sell spreads and look to try to purchase these assets at lower prices? It comes down to your risk tolerance. But I'm going to ask everybody a question. I'm going to ask you to do me a favor and do not go into politics on this. It is a simple yes or no question. And if you decide that you need to make a political statement at 8:55 in the morning, well, I am not having it. Just tell me if you watched the halftime show yesterday. That's it. Yes or no. That's all it is. No commentary. Just say yes, no. See or no. That's it. Okay. Now, I watched it. Okay, you didn't watch it. I appreciate everybody chiming in. Okay. I watched it this morning just to go, okay, what's the hubbub? All right. A lot of things going on the stage. There was an Emmy share. There was a wedding. There was a lot going on. But there was one moment in the zeitgeist. Thank you all. Look at that. Look at that engagement. That's the most engaging question I've ever had. I've asked you guys about making stock picks. I've asked you for your top tickers. It just shows you where we are, right? That's okay. There was a very quiet moment in this. It was very early on, and I don't think anybody caught it. That image right there. This is the biggest stage in all of music and Hollywood, And usually political statements are made, and there were plenty made last night, and no one caught this one. Compro oro y plato, cash only. This is the zeitgeist right here. That is a very subtle statement about the currency system. They don't do anything on that stage unless they are doing it implicitly. And that is a solid reminder in South America, in various cultures, of distrust. And once again, that is a absolute shot across the bow, and very few people will even know that message was even being sent last night. So it is a good reminder, once again, that we have a situation right now where monetary policy, financial systems are under stress. And what do people want? They want real assets, things in their hands. And this has been a story for the better part of a year and a half, going back to early 2024, when it became very clear that all monetary policy, that all of these actions were going to continue to lead to debasement and weakness in currencies. It's been the same story everywhere around the world. So keep that in focus. All right. Cash only. I like that. But anyway, here we go. Tech dispersion. NDX flat since October. Woo! Everybody keeps saying, wait a minute. Why is that not working out? Hey, everybody. Real quick. There's this thing called a liquidity cycle, and I talk about it a lot, and everybody looks at me like, who's this macro nerd? The macro nerd's right. Because once again, we are at the top of our cycle. We peaked in October, really September. And historically, we start to see rotation toward defensives, which is what we've seen, about a 14% move on defensives in that period. Materials and energy also are leaders in those sectors, and this stuff is trading sideways. And the big question now is, well, what comes of it? Look, it's not about whether or not AI is a great trade or whether it is a great investment or whether yes, it is critical. But at the same time, this cycle that is transpiring is what can lead to valuation compression. Things that were trading at 40, 50 times earnings are now in the potentially heading lower and lower and lower. I should perform at the halftime next year. It would be awful. Just one guy just screaming about cotton prices. All right, so what's the point? I don't know. I lost my train of thought. Oh, yeah, so Walmart, right? Let me tell you where we are. Walmart is now trading at 45 times earnings. And NVIDIA is trading at 45 times earnings. Walmart, that's money flowing into defensives. That is people piling in, and it showcases the concerns of where we sit. So right now, a lot of CapEx spending, huge amounts of money, a lot of questions about this. The real question is not about the CapEx, it's about the leverage in the system. It would not go over well. See, that's why I told you it was a bad idea. I just looked at the first commodity that I saw on the list and cotton popped up. I should have probably said, I don't know, soybean oil. You probably can make soybean oil equally problematic. EPS, again, focus this week will be on NVIDIA. Looking at these names, LTX, STX, names lower, team, a lot of software names. We'll talk about breakouts and breakdowns today at 3 o'clock. Some names are moving higher, right, in the pick and shovel space, but it's the software names that are getting beaten up. And for all of the chatter about what has happened with with the Claude legal AI component, which is going to beat up a lot of names that are in that legal space. Valuations for VC have gotten cut in half in the legal AI startup space pretty quickly. Key thing to keep in mind here is there are plenty of other sectors that are going to get beaten up in the next 6 to 12 months. This is not slowing down. We just get one of these events every, 6 to 12 months, really going to be 3 to 6 moving forward, where Claude or OpenAI or one of these names does something that disrupts a major sector or an investment trend, and sure enough, everybody panics. Dow's up over 50,000 And people are saying, well, wait a minute, how is the Dow going up 50,000, but your readings are red? Because I'm not measuring the Dow Jones. I don't care about the Dow Jones. It is the industrial component. Yes, that's where money is flowing. We've discussed that. But the S&P 500 is where all of that leverage, all of that rehypothecation, all of those passive flows truly live. The Dow is a measurement of only 30 stocks. The S&P 500 is 502. The NASDAQ is about 101. And the Russell is not really 2,000 when you think about volume. I think it's 1,978. The Nikkei is at all-time highs because they're printing money. Landslide victory, Nikkei surging. The Takat, I can't pronounce that. I'm not even going to try. Somebody used to get mad at me because they say, well, why don't you just try to pronounce it? Like, no, because then everybody will get upset about that, and they'll take that out of context. I'll work on it. Just say the Prime Minister of Japan. This is not CNBC. I am not. No, it doesn't matter. It doesn't matter. What matters is the numbers. Samsung's up. Look at Honda, look at Toyota, look at everything. Look at everything across the board at EWJ. But remember, all of this printing, yeah, thanks, Scott. Thanks for typing the name. That doesn't do anything for us. What? No, that is from Breakfast at Tiffany's, and that did not go over well. That did not age well. It's all right. Bloomberg APEC Index, Asia Pacific moving up 2.2% to a new record. U.S. futures were green to start the day. We'll pay very close attention to see if CTA selling picks up. S&P futures depth while 7th percentile midweek. BTC recovered a little bit, $70,000. Who cares? We're actually down to 69,970 this morning, if you care. Well, again, the reminder is that Bitcoin is an excess liquidity play, and it is interesting to see that Bitcoin is down while Japan is surging, because once again, that relationship between Japan and Bitcoin has not been strong. Where has the correlation, where has the strength been? It has been between Japan and gold prices, Japan and silver prices. The ongoing debasement trade remains strong. And the other thing to keep in mind, that Nikkei and AI trade, the AI ETF and the Japan trade, Nikkei, are running like 1-to-1 right now. So very close to keep that in mind. We'll see what happens with Mr. Saylor riding that chair straight down, and we'll go from there. Finally, NVIDIA, that's the big one, obviously. January quarter, $67.3 billion against consensus of 63. Guidance going to be in focus. Want to just see what happens here. Key things this week, what we're looking for on earnings. DT, Monday is today as well. Like literally, they thought that was funny. Monday, on a Monday. Okay. Datadog, Spot, Fiserv, that's going to be a very important one. FISV tomorrow. We'll look at Lyft as for some clues around Uber, Shopify, Cisco, and Hubs. And we'll dig in deeper in this week. Hey, Secret Age Charlie knows the score. All right. Well, let's get over here. Ba-da-ba-ba-ba-da-ba. Let's add. You don't need me on this one. Just click your little lab button. Give me some exponential moving average. MOVAVG exponential. Hey. And then watch as I completely and totally dominate this. Let's go with pink. Pink's great. Great. Just pure LA 1980s colors is what we're going with this morning. And how about a nice pink for the 50-day? Great. All right. All right. Can you pop up the runners again? I can do a lot of things. Well, we're going to talk about every one of them. So, give me a sec. CPRT. Coppert. More industrials. More good. No debt on this name, by the way. Pretty nice little cheap name. And why don't I just walk you through every one of them? We do that. It's a service here. Copart. Hey-o. Well, nice little move here. What was that, Friday? Look at that. Oh, specialty stocks. Very exciting time. Stock's been moving higher since February 3rd. Coming out of that 39. Here, pretty simple. Looking for a relatively quiet move back up. Industrials looking stronger. And what we do here is go out to the 20th because, once again, we have options expiration. Remember, we are shut down next week, Monday, President's Day. Hey, here's an idea. Play the Super Bowl on the day before that. What are we doing? Buy the 40. Sell the 42.50 for the 20th. It gives you a $100 trade for 147 return, 4103 break even, 40% probability of profit on the 42.50 call spread for Copart. Very exciting. What else we got? Well, as soon as I can get my screen to work, TXT. That's Textron. Sounds like a terrible 80s techno band. Just pure momentum. Very strong move since that 27th. There was some buying pressure on this. This is where I would prefer on this type of industrial after a move like we have seen on TXT. It's been a nice burn higher. Yikes. That doesn't tell me anything. 5-day moving. There we go. 5 days. Good run from 85. And it's been a nice pop. Here's the simple thing to do. Instead of trying to force something, what you do is you just sell a put spread. So a bullish put spread, credit spread, forgive me, TXT. What we look for is kind of comparable to where we sit here, but I would go out to March if you have the wherewithal to do so. And you can look down at that, 90 and 87.50 level. I would like to see a little bit more options activity. Not a ton out there at the moment, but something as simple as the 92.50 and the 90 for next week wouldn't be bad either. What that would do is set you up for, 45 cents on 250. So if you could sell next Friday's 92.50, buy the 90. That gives you a spread of $200 to make 45, 22% max return on risk, 82.5% on probability of profit, and a break even of $92. And then TJX. What? How is this on our list? TJX companies. Remember this company? Hey, I got a bone to pick with this one. During COVID, I had a client who sold products to TJ Maxx. He sold products to them to sell in their stores. Their traditional payment period, the amount of time that it would be on accounts payable until they get their check, was 45 days, which was already long. TJ Maxx went to 180 days during COVID. 180 days. So if you're wondering why TJ Maxx didn't have things on their shelves, it's because they weren't paying their suppliers, because their suppliers couldn't turn around and actually do anything with it. And just because of that, I will not trade you, TJ Maxx. You are out. To the downside, hey, boom. Ugh. There's so much crap out there right now. Have you seen Hims? Oh, I can't wait to look at it again. Boom. There's just so many of these names. DMC Global down 2% today. Manufacturing, businesses, construction. It's just weak. It's just a weak name full of weakness. What do? Long put. Pretty simple. Go out the next week. Just try to ride this lower. You buy. What do? You buy. You buy the put. And then you wait, and you wait, and you wait, and you wait. Really an ugly options chain, so, oh well. We move on to ALB, and we're watching some profit taking, seeing some of these names dip. I like ALB a lot. It is a great momentum stock, and if we start to see just profit taking in the broader material space, ALB is going to take on the chin a little bit. Couldn't tell you why people are so anti this, but the core thing here has just been we were overbought on ALB not too long ago, and the weakness has taken us to that crossover on the 8 and the 20. Let's move into that one-day chart. It's just the volume. This thing is, yeah. All right, keep going. Azure. Literally anything that is tied to, you should be trading actively all of these technology names, these software names, because there's going to be a lot of movement on volume weighted average price with some of them. ASUR, what does it do? I don't know. Sounds great. Azure software. The weakness is there. The downside for ASUR is $7, $7.50. Assume that all of these names are still under the same pressure that we saw going back 180 days right here, right? So you're buying at the 9, you're selling at the 7.50. You're buying at the 9, you're selling at the 7. Puts. And Goldman can step in and it can make all the statements that it wants to make. It's not going to change the fact that these are the types of companies that are going to get punished by AI. And one of the other things to keep in mind, I'm just going to point this out. Goldman comes out the other day that says, well, the worst is over. Okay. Well, it's still trading at 8 times earnings. Now, let me just do a little bit of mathematics for you, okay? This is actually really important. This is one of those things where people ask me questions about markets and they say, this is really, too on the nose macro. And I'll just say, I get that, but here's the thing. If you're not paying attention to this one single chart, just this one single chart over the next 6 months, 6 months is the only thing that you have to understand is the importance of this chart. This chart right here is the valuation support for software names in the IGV. Okay. Once again, for everybody in the back, everyone focuses on the PE ratios. And I could care less about PE ratios. PE ratios don't tell me anything about the financial structure of a company. Doesn't tell me really truly if it actually is overvalued. It doesn't. Particularly in an environment where, fund managers don't care about PE ratio because they're levering up and then passive flows are buying stocks. This is the chart that matters for these tech names, for these software names, okay? We're not going to go all the way back to the dot-com bubble, but we are going to point out that when we moved through our liquidity cycle, it ran from late 2018 all the way to the top, which was November of 2021. What do you see? Software companies during that expansion of liquidity increased by 5.5 to 6 times sales to 13 times sales. The liquidity cycle bottomed out in late 2022, and it started to pick back up again, and we went from 6 to 11. We are currently at 8. What does that tell you? It tells you that our downside is 5.5. So do the simple math. Take all of these companies, assess them. divide it by 8, and then multiply it by 5.5. That is what your target number is over 12 months. Now, what does price to sales mean, Garrett? This is the important one. So I want to stress that this stuff does matter when you're going the other way, when you're going down. Okay. Very simple. Back in the dot-com bubble, there was a huge move on all of these companies, not profitable. They were measured on price to sales, not price to earnings, because guess what? They didn't have any earnings, but they had revenue. Okay. Here's the important part. Sun Microsystem executive, CEO, is asked, well, what happened to your stock? Sun Microsystems gets blown out. Companies like Digital Island get blown out. Companies like Cisco implode. And he took the time to explain it to everyone. Did everyone listen? Of course not. Why would they do that? This chart is this quote is the most important quote of the dot-com bubble. And it was Scott McNealy, CEO, Sun Microsystems, at 10 times revenue. So let's just change this to 8 times revenue. I want you to hear this. At 8 times revenue, to give you an 8-year payback, I have to pay you 100% of revenues for 8 straight years in dividends. That assumes I can get by my shareholders. It assumes I have 0 cost of goods sold, which is very hard for a company. It assumes 0 expenses, which is very hard with 39,000 employees. It assumes I pay no taxes, which is very hard. It assumes you pay no taxes on your dividend, which is illegal. It also assumes with 0 research and development for the next 8 years, I can maintain the current revenue run rate. Now, having done that, would you like to buy my stock at 10 times earnings? Do you realize how ridiculous those basic assumptions are? There you go. We are in a liquidity cycle that has just peaked. We have all of these stocks that are basically in trouble. You have more than 40%, at least more than 35% of the Russell 2000 that is unprofitable, and you have a wall of refinancing that is coming later this year. Keep in mind that the United States government, with the way that it is going to be positioning its liquidity, the way that it is moving to the front end of its yield curve to sell bills to fund this government, the United States government is going to be crowding out investment for the private sector. And overall expectations of refinancing goes from about 6.5% to 7% of GDP last year to 13% later this year. It is a lot of refinancing, and is why we anticipate that rates will rise. The market will force that. And all of this reprieve right now with Japan is clearly an issue. This valuation support is not over, and it will chop along the way. The way that these things work, lower highs, lower lows, squeezes along the way. But the long-term expectation in terms of a liquidity cycle and in terms of how you function and focus on where money moves, we are moving back toward that 765 number. And if it gets real bad, think AI just completely disrupts, you might see something that you have not seen before. Okay? All right. Huzzah. It is 9:20. It goes by so quick. I'm going to go listen to more Stone Temple Pilots. I hope everybody has a good trading day. It is 9:20. Don's coming up in 10 minutes. He's going to throw some music on and make fun of my hair. That is par for the course. I am almost, everybody, to 1 year with TheoTrade. That'll be March 1st, which means it's time to get somebody else in here and kick them. I hope everybody has a great day. We'll catch up in a little bit. I'll be back at 3 o'clock and live tomorrow again. As always, 8:45 for Market Masters. Have a great day.